Hey everybody, welcome to the VIP Financial Education YouTube channel. My name is Matthew Pillmore. I'm the host of this channel, and I'm also a serial entrepreneur. I'm also a remote entrepreneur. I actually own 6 different companies here in Colorado today on a cloudy day, taking a quick break from receiving some brand new equipment for my sewer business called Small Town Drain here in Colorado. I'm actually sitting in one of the real estate properties that I own and manage as a short-term rental too. And I thought it would be interesting to take a quick break, have a conversation with you guys about what worker migration actually means for real estate. Make sure you stick around because new data is suggesting that remote workers are going to continue to relocate in 2023, but the preferred destinations are actually beginning to shift. And in today's video, what I want to do is discuss where workers are actually moving and what it might mean for real estate investors moving forward. Make sure you stick around to the end of this one. Now, according to the National Association of Realtors, Americans have been moving less frequently in recent years. However, last year, Florida and Texas saw the highest number of out-of-state residents, while California, New York, Illinois, they had the most people leave due to out-of-state moves. And a survey of 6,000 different U.S. workers conducted by Apartment List shows that remote workers are the ones that are leading the way in terms of moving. 27% of fully remote workers and 31% of hybrid remote workers moved last year, compared to 17% of on-site workers. The survey also indicated that remote workers are more likely to move in 2023, with 36% of fully remote workers and 44% of hybrid workers planning to move, compared to only 27% of on-site workers. In the early days of the pandemic, numerous employees actually sought refuge from the high cost of living in major cities like New York and Chicago, or even San Francisco and Seattle, and preferred instead the suburbs or more affordable metropolitan areas. However, according to LinkedIn, the migration reports that they've been keeping, there have actually been a shift in patterns that workers are now leaving smaller towns and are moving back to some of the same cities that experienced the exodus that we were seeing. With almost 200 million US users, LinkedIn is actually able to track job changes and watch these city migrations, and then it uses that data to compile migration reports. And according to its February 2023 workforce report, the top 5 cities where workers were actually fleeing included Springfield, Massachusetts at number 5, Portland, Oregon at number 4, they had Tallahassee, Florida at number 3, College Station, Bryan, Texas at number 2, and then Wenatchee, Washington was actually number 1. These cities may have some heavily discounted homes, but be careful entering into the markets without a solid exit strategy in place. Now, let's take a look at the top 5 cities where workers are moving to, based on that same LinkedIn report from February of this year. At number 5, Nashville, Tennessee, an area that we've been focusing a lot of our attention for short-term rental property management. That's a city that continues to see more and more workers calling it home because of its strong startup scene. Nashville's lower cost of living and startup expenses contribute to the success of the businesses that are in that city, and they have a growing population that's being an added advantage there. Healthcare is the fastest growing industry in Nashville. They have numerous new graduates that are being trained every year, and many others are now relocating to Nashville in search of job opportunities. The number 4 is Tampa. So Tampa Bay, Florida is an affordable city with the added advantage of not having state income tax. That's where I just sold a property and have been spending a lot of my time over the last year. The cost of living there is 3% lower than the Florida state average and over 10% lower than Miami's cost of living. Great area. Moreover, Tampa's housing costs for both rentals and real estate are on par with the national average, making it a better choice than Miami, with average housing costs over $50,000 lower than Miami. So Tampa is regarded as one of the best cities for real estate due to these factors. It's growing in every which direction, and it's attracting a significant population of singles and young professionals there, and it's lowering the city's median age now to 35 years old. So all of these factors make Tampa a really great target for workers making moves. At number 3 on my list is Seattle, Washington. Now, Seattle's an interesting one because as census data showed, Seattle experienced a population decline from 2020 to 2021, which was a phenomenon that was not seen in almost 2 decades. While various factors contributed to Seattle's population loss, the growth of remote work was the most significant, as it freed up many employees to reside in the areas beyond urban employment centers. Now, 20-somethings are a key driving force to Seattle's resurgence. According to a 2022 Axios poll, college students chose Seattle as their #1 post-grad destination point. The housing market is another trend driving people to choose Seattle over other cities, as it was among those most impacted by the waves caused by people that were moving during the pandemic. So with lower housing prices, relatively speaking, of course, Seattle is becoming slightly more affordable than it was before, and it's adding to its allure to the modern workforce. Let's talk about San Francisco, California, because that actually came in at #2 with many of the same reasons as Seattle. According to LinkedIn's February 2022 report, San Fran was among the top 10 cities losing the most people. Just in 1 year, it's gaining the second most workers in the country now. San Francisco's housing market experienced one of the most substantial price drops recently, potentially luring back some of the remote workers that were seeking refuge elsewhere or wanting to escape the high cost of living just 1 short year ago. Now, lastly, or should I say firstly, at #1 here on the list, Austin, Texas. Austin actually attracts so many people because of the availability of well-paying jobs, especially in the thriving tech startup and established tech company sectors. And that leads to its nickname, Silicon Hills. In Austin, the economy is booming. The culture's thriving, the weather can't be beat, great food, great music. So why does any of this matter to real estate investors? Well, for one, it indicates the markets where there's still money to be made within real estate. And with the market as it's been, it's more critical than ever to be strategic and really well informed when doing deals. For example, making great money on fix and flip deals might be near impossible in certain locations, while much more common in others. We actually just did a video on this very topic, so make sure you check that out by clicking the video link in the description below. I'll also throw it up in the corner of this video or down in the description. Either one works fine for me, but like I said, it is going to be crucial to ensure that you're keeping an eye on this kind of data if your aim is to make any money in real estate over this very precarious next 12 to 24 months. The more that we look at the data, the more that we find that it's looking less and less likely that a massive shift in the market is coming soon. But we'll of course be keeping our eyes peeled and let you know what we find when we find it. So be sure to subscribe to the channel, make sure that the post notification bell is turned on. You'll stay up to date with all of our latest videos, and we'll be able to teach you exactly how you can continue to grow your wealth, whether it be proactively or passively. We definitely try to uncover some of the best opportunities that are out there and just remain objective and play consumer advocate on your behalf. So make sure you drop a comment below. What city would you move to if you had the remote capabilities, the geographical mobility to do so? I bounce around a lot. I'm sort of a rolling stone in that sense. Spend a lot of time all over the country building a variety of different companies. So it's very important to me to pay close attention to the national trends. And I certainly recommend the same for you. We're looking at fix and flip deals right now, also in Nashville. Been doing the short-term rental property management side of things now for about 2 years, and have been managing this short-term rental now for almost 4 years. So it's been a long journey in a lot of different aspects, but so much of it is something that I'm passionate about, and I really definitely recommend that you guys continue to seek things that keep your attention, that you can remain excited about when you wake up in the morning, when you go to bed at night. You want to make sure that it's something that you continually drive forward day in and day out and maintain consistency with. So stay tuned to this channel. We're going to continue to bring you those opportunities that may excite you to that level. Drop a like on this video if you wouldn't mind as well. YouTube has been playing a little tough with us as far as the algorithm is concerned, so we definitely appreciate that small gesture in exchange for us continuing to bring you the content that we do. And until we see you on the next video, my friend, make it a great day today. I'm going to get out there and start checking in this brand new equipment that we've got with our drain business. This sewer business has been a fantastic endeavor for me so far, and I'll drop some additional videos about that and how it costs no money down, 0% interest, literally the potential to make millions and millions of dollars every single year. I have no previous experience in the sewer industry whatsoever. I've got a team of people that actually handle the dirty work. I never get dirty personally, but have been able to use debt weapons like we teach about on this channel to play the money partner in this venture. And for the last couple of years, we've been exponentially growing year over year, and we're about 5x average this current time over last year. So very exciting stuff. If you're able to stay plugged into the channel, we're going to keep teaching you guys things that you maybe hadn't thought of before. Look forward to seeing you on the next video, guys. Until then, make it a great day today and keep on cash flowing. Take care.